Hey YouTube, what's going on? Chris here. Want to bring you all an update of something I was doing some studying on, doing some reading in my car. And what I wanted to share with you today was crossovers and penetrations of moving averages. And what we're going to do, we're going to look at this in uptrends, and we're going to also look at it on downtrends. And I know there's some people out there who are saying they really like these short tutorials, so I'm going to continue to bring these to you. Let me know down below if you get some from this. Like, subscribe, hit that notification bell. And guys, if you like something, I'm going to keep doing it. If it's something that you're not too into, then I'll just back away. But I think this is really important stuff to learn, and it's really helped me in my trading, and I want to help as many people as possible in their trading. So what it says is crossovers and penetrations, and this book is the 7th edition technical analysis of stock trends. So this is a really good one here. As a general rule, consider the crossing of two lines by the price line as a sell or buy signal in the direction of the crossover or penetration. So number one, uptrends. Long positions are retained as long as the price trend remains above the moving average line. So whether you're looking at a 9 short-term trading or 200 long-term trading, it's all going to depend on what type of trading you're doing. But you always want to be above that predetermined moving average when you're in an uptrend. Okay, so next one. When the price line intersects or penetrates the moving average line on the upside, it activates a buy signal. B, when the price line goes above the 200-day moving average but falls sharply towards it without penetration, it is a buy signal. C, when the price line falls below the moving average line while the line is still rising, it could also be a buy signal. And then D, when the price line spikes down too fast and far below a declining moving average line, a short-term rebound towards the line may be expected, a possible whipsaw trap. So they're all talking about a little bit of the reversion to the mean. You'll notice that when you drop real far, real fast, say you get really far away from the 50-day moving average or whatever, guys will buy that with the anticipation that you'll pull back close to that moving average, and then you'll get rid of your stock, but you'll take that percentage there as your gain. Now in downtrends, short positions are held as long as the price trend remains below the moving average that you're picking. So if it's the 50-day moving average, you always want to stay below that 50-day moving average. Think of that as a ceiling when you're in downtrends. It says when the price trend reaches a bottom and turns upward, a penetration of the moving average is a buy signal. Next, when the price line moves the average line while the average line is falling, it is a sell signal. When the stock price line moves below the average line and rises towards it, but fails to penetrate and bring down again, it is a sell signal. If the price line rises too fast above the rising average line, a short-term reaction may be expected. It could be a whipsaw. And then D, occasionally penetration of the moving average line will occur in close conjunction with the penetration of a trend line. Then according to its direction, it is a buy or sell signal. So that's something, guys, I really want you to pay attention to. So when you're looking at these trends, and say we're in an uptrend and you have a trend line drawn on those higher lows, and you also have, say, a 50-day moving average going along with it. If you see a trend line break and we close price down through that 50-day moving average, most likely that's when you want to get out of that position. We're going to drop hard, we're going to drop fast. But say you just broke down through that trend line, but you're still up above that 50-day moving average, then that's the time to still wait and pay attention to what's going on, but you wouldn't necessarily want to sell right away. And then if you're up above the trend line, you're up above that 50-day moving average, and you're moving up, that's the time whenever you have those retracements back to the moving average or the trend line, that's when you want to buy. When you see a bullish candlestick pattern off that trend line or off that moving average, some type of formation to where we'll go up and get that next higher high. But really pay attention to these things, guys. They can help you out dramatically. You always want to be up above those moving averages when you're in uptrend, and if you're shorting, you want to be down below those moving averages, having them act as a ceiling for you whenever you go short. So I want to put this on your radar, guys. I got to get to my next client here, but just had a little time in the car and just wanted to share some stuff with you. So God bless you all. You like these, like, subscribe, hit that notification bell. Take care, my friends.